very warm welcome to you. So we are talking about the opening in trading. Now that is going to be on indices that have a cash open, so DAX, FTSE, Dow, S&P 500, NASDAQ, all that kind of stuff. It's going to be your UK stocks, your US stocks. It's not going to be currency so much because to me, because of that 24/5 nature of them, you don't get that opening boost of surge of kind of stuff coming in. However, one caveat to that is you can trade it, when we have cash opens for the specific countries as well, because there will be money flowing into dollar when US opens, money flowing out of dollar, whatever it may be. So, but let's focus just purely on the indices and purely on stocks, and let's look at some strategies for trading the opening drive. So let me just define what I mean by open. The open, I mean kind of the first hour of the day. For example, could be the first couple of hours, but let's just keep it to the first hour. Why do we want to trade the opening hour of the day, and why do we want to trade the opening drive? Well, the open, if you can get it right as a day trader, is one of the most profitable times of the day. There's often a supply-demand imbalance. If you can imagine the kind of, the seesaw analogy that we've used before. If you've got a lot of pressure coming in on one side and very little pressure on the other, let's do a lot of pressure on this side and very little pressure on that one. You're going to get a lot of supply-demand imbalance. You're going to get a lot of movement in the price because the volume may well be aggressive in one direction and lacking in the other. It may well switch very, very quickly. You may have a lot of institutions flowing in one direction, or you might have an institution that's very aggressive and then others see that as an opportunity. So there are opportunities as day traders to get involved and get in tune with the opening drive. Now, one thing you've got to be careful of, and one thing from my personal experience, is that I struggled with the opening drive for a long time, but it then became something that was a really key part of my profitability, was being able to trade that opening drive. But it's something that I lost a lot of money in the first kind of ways first sections that I was trying to do to get profit from it. So what have we got to be careful of? The first kind of tip that I would like to share is, hey, have a thesis, have a premise that you're looking for. If you're looking for, there's a couple of things you can look for on the open. You can either look for, hey, a drive in one direction, a pullback, and a continuation. I want to get on that, right? It's very, very simple. It's like, listen, I think there's going to be a good momentum. I think this is going to go at least 50 ticks, and obviously you get that data from previous kind of days, so you put it in perspective. You're not like looking for 300 ticks when it's never ever happened in the first hour. So you put it in perspective and say, okay, I think we're going to get a good 50 tick opening drive. If we get a push on good volume and a pullback, and we've still got, say, 25 ticks plus to go, I'm going to take the trade because I think I can risk 10 and I can look for the last 20, 2-to-1, blah, blah, blah. A frame that's quite nice. That's one way of doing it, and I like that. And one thing you're going to look at is you're going to look at your overnight range, you're going to look at your previous day's trade, your previous levels, all that kind of stuff to get that into perspective. Another one you can look for is, listen, I want to look for the fake out. I want to see that the price push to highs. I want to see it push again. I think we're going to undo all that for whatever reason. Again, we're not going to detail about why you would think that, but again, this is kind of framing the trade and getting the framework in place and the premise in place for the trade. So you're looking for exactly that. You're saying, okay, there was a bit of resistance prior day there. It was a weak day anyway. I think we're going to maybe push up to that. If we get a double top of that, and in the first hour, I'm going to smash that short. My stop's going to be here, and I'm going to close out into the stops of those people from the opening print. Another example, something like that. You're looking for that specific thing. You could have another one, a final one, where you say, listen, I think we're going to ping pong, we're going to test highs, we're going to test lows, and we're just kind of just going to dampen down the amplitude of that. How do I want to trade that? Well, I want to wait for a big extreme through, or I want to kind of whatever you structure it. The point is you get your idea together. You have a basis for that idea based on the previous day or where we are in the open, or with the European session if we're trading the US session, or if it's a stock, how is it gapped, how was the pre-market session traded, all that kind of stuff. You build up an idea, you put one premise and thesis together, and you say, hey, listen, I think there's going to be a good drive off the open and I want to get involved in it. and then you get that and you wait for that. If it doesn't happen, you don't trade it. And this is the thing where I kind of had my first struggles with this, is that I would flip-flop around. I'd look for the drive, then look for the double top, look for the thing, and when I kind of twigged and said, okay, well, have an idea, have a strategy, look for that strategy. If it works, great. If it doesn't, take the stop, move on, rather than looking for this, for that, the other, because you tend to say, oh, I think it's a breakout, no, I think it's double top, and you're flip-flopping in your mind, and it's not really doing you any good, because you end up, kind of get frustrated because you got this, you got that, you didn't get the other, blah blah blah. You know how it is, guys. If you've been trading for a while, you're watching this, you know the school. And let's look at one more thing here. I've got with I'm going to use Snapchat, because this is a kind of no, I'm not going to use Snapchat actually. I've used that before. I'm going to use US Steel, for example. Okay, I'm going to say, right, it is a good one here. Just pick this out. US Steel, 5-minute chart. Code for this is X. Opening drive. Let's say we'd seen the prior day was good, closed strong, and we think it's going to continue. So we've got a little bit of a gap down here. So we say, okay, well, I'm going to buy the first pullback. If we drive up above the prior high and pull back, I want to buy it. That's our premise. We take the trade, it comes, we get the first pullback, we buy it, we exit the trade. If our premise was to fade a double top, then we kind of we've had to wait, haven't we? We've had to wait until here. Yes, we're still making money, but this is far later in the day. Perhaps we were looking for a bit more of an aggressive move. We didn't get it. We didn't chase it. The point is putting the structure together, waiting for the trade idea, executing it, and understanding that once the open's done and that's done, clear the trade out, take the money or take the loss, move on, look at the trade, look at the market, look at the stock from a different perspective after the opening drive has happened. Anyway, guys, I hope that's helped. Any comments below about how you trade the opening drive, or any ideas for trading the open strategies like 15-minute breakouts, 5-minute breakouts, that kind of stuff? Would love to hear your comments and thoughts in the comment section below. Take care. Bye-bye.